Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the Donald Trump-Kim Jong-Un meeting, the start of the World Cup, the FOMC rate decision, monetary policy decisions from the European Central Bank, as well as the Bank of Japan, and a host of UK economic data. But before that though, I'll run down some of the top corporate results to watch for this week. On Monday, Games Workshop report full-year earnings, while HSS Hire Group and Dave & Buster's report first-quarter results. On Tuesday, New Look Retail Group report full-year earnings, and Punch Taverns and Crest Nicholson offer half-year updates. On Wednesday, Biffa and Mulberry Group report full-year earnings. Then on Thursday, Majestic Wines report full-year results, while Kruger and Adobe Systems both report quarterly earnings. Now moving on to the economic calendar, on Monday we have UK industrial production and UK trade balance. On Tuesday it's UK again, the unemployment and average earnings and US CPI data, but those are likely to be overshadowed by the Trump-Kim meeting. On Wednesday there is China first quarter GDP and UK CPI, then the FOMC rate decision coupled with the Fed's updated economic forecasts. On Thursday, there is China retail sales, then the ECB rate decision, ECB President Draghi's press conference, and US retail sales. Then on Friday, we round off a very busy week with the Bank of Japan rate decision and Eurozone CPI. So Jasper, this Trump-Kim meeting, first of all, is it actually happening?
Well, yes. I mean, it seems like it is. I mean, it's been on and off several times, so we can't discount the idea that maybe it suddenly gets called off last minute, but it looks like it's going ahead. All the whole team from the US is over there, ready for the big meetup between obviously the Donald and Kim Jong-Un. So it looks like it is, but I think what's almost helpful about the fact that it's been cancelled several times is that actually it's taken on a slightly more farcical note than not quite maybe the serious occasion that it could have otherwise been, and so perhaps if it were to get last minute cancelled, or maybe it doesn't go as swimmingly as people would hoped, then actually I don't see it causing any great fallout in markets. Equally, it's going to be a great photo shot if it happens of the two leaders meeting, but again I don't see a massive rally across markets necessarily. Just because that happens.
Okay, great. And the start of the World Cup. Let's just discuss what it will do with the markets. But first, who do you think will win?
My bet on it. Well, I suppose you have to go for probably Germany or Brazil. But actually, I think maybe Portugal as an outside bet with better odds. Okay, good. We just had to cover that. And on a serious note, then markets. Well, yes, markets is it's almost not as serious because it's a very marginal effect, if any. I think it's too strong to say there's no effect. So there was some research I was reading by Goldman Sachs who said that basically the country who wins the World Cup, based on the tournament since the 1970s, actually their stock market has seen about a 3+% outperformance of other indices. Interesting. And in the 3 months following, what's interesting is that the runner-up in the final has actually underperformed by as much as 5% on average. Wow. So obviously massive disappointment if you don't quite clinch it in the final game. So there is something there, but generally speaking, I wouldn't go suddenly, shorting your own domestic market if you're a German in Germany and you lose the final. Other factors are obviously going to be more powerful, but that sentiment factor, can actually cause that underperformance. So it's worth bearing in mind. Okay, cool. And so moving on, central bank action, we've got a good bit of that this coming week. We've got Fed, ECB and Bank of Japan. Yes, so starting off with the Fed, it looks like they're probably going to hike again. I don't see any particular reason why they haven't. The language hasn't really suggested otherwise. Basically, the Fed is a pretty, we've said this before, it's kind of a known scenario at the moment. It's quite by the book. At the moment, it's every meeting, there's a press conference, there's a rate hike. And we had some pretty good jobs numbers the other week. Growth I think looks like it's picking up in the Q2 versus Q1. So and inflation is actually kind of close to the target in the US. So I think all factors point towards another rate hike, and I don't think that's going to upset markets too much. That's kind of what's expected. Where the upset can happen is the ECB, and so they've already started prepping the market for it, and so we've already started to see the euro move higher, and I think it can continue to move higher because it had such a sharp drop. It's sharp drops typically followed by pretty sharp recoveries, even if the drop eventually carries on. And why we might get that sharp rebound in the euro is if they're fairly overt about the ideas of tapering. So they've already said, a couple of members, the chief economist Prayet, he said that they are going to discuss how to wind down the QE program at the meeting. So obviously we know it's going to happen, but the fact they're discussing it, obviously that's the first milestone towards actually getting a time frame for when they're going to do it. And obviously after that you have the rate hike. So markets looking forward and looking at potentially, now that we've got a real time frame in mind. Now they're discussing it, they have to actually move time forward towards that rate hike eventually.
Okay.
Bank of Japan, it's been a bit of a non-event meeting for quite a while now, but what they do like to do is surprise the market. So if anything, we're expecting something boring, but we're more open to the idea of a surprise because that is typically how they like to do things.
Okay, great. And then there's no Bank of England meeting, but plenty of economic data.
Yes, so we haven't mentioned the pound, but the pound's been really crushed against the dollar, especially because of the dollar strength. Dollar's tapered off a little bit, but the pound's still been quite weak against the euro recently. So there's two things really. The economic data has been fairly soft, and we've also got these Brexit worries as well. Last week, it looked like the Brexit secretary might resign at one point because there's obviously big disputes about how to handle the Irish border and what that means for the customs union, whether we're in and out of it. So the whole situation isn't really resolved at this point. Until it does, I think it keeps the pound under pressure. And what we then need when the pound's under pressure is for the economic data to look a bit better. And actually it has started to improve a bit based on the manufacturing and construction PMIs. So, the big ones to watch next week will obviously be the unemployment rate and the average earnings and how that relates to inflation. And then we also have some other smaller numbers as well, but all the idea being that they need to kind of offset this Brexit weakness for the pound to actually recover alongside the euro if the euro is looking at a bounce.
Okay, all right. Thank you, Jasper. And thank you for watching. Don't forget to follow us on social media to get these videos as soon as they're released.